Welcome to The Explainer. Today, we are diving deep into Rheinmetall AG. Now, this is a German industrial giant that's found itself right at the heart of Europe's historic rearmament. And for investors, well, it's become one of the hottest and, frankly, most expensive stocks on the entire market. And this number right here, this is why everyone is talking. We're looking at a valuation multiple of nearly 40 times earnings. I mean, that's more than double its closest peers. So what on earth is driving this massive premium? And maybe more importantly, is it actually justified? Let's unpack it. To really get a handle on that crazy valuation, you have to understand just how profoundly this company has been transformed. And I mean, in just a couple of years, it's gone from this sprawling, kind of complicated industrial conglomerate into a laser-focused, pure-play defense powerhouse. And it all comes down to the single German word, Zeitenwende. This word is the catalyst for absolutely everything. It literally means a turn of an era, and it signals this massive shift where defense spending is no longer some optional line item in a budget. Nope, it is now a non-negotiable national security imperative across all Europe. This is the tidal wave driving the whole story. And the speed of this change is just staggering. In the span of just a few years, Rheinmetall went from being a well-respected industrial company to a strategic pillar of European security. It got promoted to Germany's top stock index, the DAX, and built up an order book so huge it pretty much guarantees its revenue for years to come. Okay, so let's get into it. Let's talk about the bull case. Why are investors so willing to pay such a high price for this stock? Well, it all boils down to this belief in a long-term, structural defense supercycle that honestly might just be getting started. I mean, just look at this growth. It is absolutely explosive. That jump in 2024, we're talking a nearly 36% surge in a single year. This isn't just a good quarter. No way. This is the direct result of an entire continent rushing to rearm and restock, and Rheinmetall is the company they're calling first. Now, this shift in focus, this is absolutely key to the bull case. The high-margin defense business is now the core of the company, hands down. And for you, the investor, that's crucial. Why? Because it's not just driving more sales, it's driving more profitable sales. And that fundamentally expands the company's bottom line. So to sum up the bull case, it's pretty simple. Right company, right market, at exactly the right time. They dominate products that are in huge demand, they have a backlog that gives them incredible visibility into the future, and they have this really clear catalyst just sitting there, the potential to sell off their old civilian business and unlock even more value. But, and you knew there was a but coming, all of that incredible optimism comes with a very, very steep price tag. And that brings us to the powerful bear case, the significant risks that have a lot of investors feeling pretty nervous. And this right here is the central question of the whole bear case. Is the stock simply priced for perfection? Because when a valuation gets this high, the market's expectations leave absolutely zero room for error. Any stumble, any little delay could have a major, major impact. And this table just drives that point home. What's so interesting here is the sheer scale of the valuation gap. Rheinmetall is trading at a premium that's more than double its largest, most respected global peers. The market isn't just pricing in future growth, it's pricing in flawless execution of that growth. And let me tell you, that is an incredibly difficult thing to achieve. And that brings us to the single biggest risk. Demand isn't the problem, the orders are flooding in. The monumental challenge is execution. Can they actually build and deliver everything on time? This means they have to rapidly scale up an industrial base that's been underfunded and, frankly, kind of sleepy for decades. And you can already see these challenges showing up in the financial statements. The company is burning through cash right now to build factories and stockpile materials. It resulted in a negative cash flow of over 600 million euros in the first half of 2025. Now, management is promising this will reverse dramatically in the second half, but for now, it's a huge red flag that shows just how much strain all this growth is creating. So all this leads us to a picture of what you might call a two-speed company. And understanding this internal tug-of-war is absolutely central to the entire investment story. You've got the engine, and you've got the anchor. And here's that internal conflict laid bare. On one side, you have the defense engine. It is absolutely booming with incredible growth and fantastic margins. But on the other, you have the civilian anchor, a declining, barely profitable business that's getting hit by recessions and the EV transition.
This anchor is a real drag on the company's overall performance, which is exactly why the market is so obsessed with a potential sale.
So, how will we know if the bulls or the bears have it right? Well, if you're an investor or if you're just watching this story unfold, here are the 4 key things that you absolutely need to be monitoring.
These 4 points, this is the whole ballgame. First and foremost, cash flow. They have to prove they can turn all those orders into actual cash. Second, how quickly are they working through that massive backlog? Third, any big wins on major U.S. Army contracts would be a total game changer. And finally, any concrete news on selling that civilian anchor business will be a huge catalyst for the stock.
You know, when you strip it all away, the entire investment case, all the hope, all the hype, all the risk, it just boils down to this one simple imperative. The orders are there. Now they have to prove they can turn them into tangible cash. The answer is going to come down to execution, and that leaves every single investor with a critical question they have to weigh for themselves. Is Rheinmetall a generational growth powerhouse that truly justifies its premium price? Or is it a really high-stakes bet on a perfect future that it just might not be able to deliver?